The investment industry is changing. Investors are increasingly demanding less complex products with transparent structures that allow them to see exactly what they are getting. Joining us now in Johannesburg is Gareth Stobie, Managing Director at CoreShares, and also in Cape Town with me is Brian McMillan, Head of Retail Sales for Investec Structured Products, to tell us more. Gentlemen, thanks very much for joining me. Starting with you, Brian, because you're here. Yes, transparency and costs, they seem to be the two themes in financial services in South Africa at the moment.
Yes, certainly, and I think it's only going to become something that people are more and more aware of. We've seen legislation coming through. We've got RDR coming through in the future, and people are really querying, where are my returns going? If markets are doing this well, why aren't I seeing the returns on these? And one of those is a problem that I think probably, hopefully in the past, with hidden fees. And also fees that were way too high for the industry. We've seen that's, with some of the products that have come through, like Gareth's products on the ETF side, certainly with our structured products, we've really moved away from any kind of hidden fees within them. All our structured products make sure that we're putting in the products, that all the fees are worked into it. What you see is actually what you get. So the returns are there.
Very good. Gareth, would you concur with that? I mean, is this a movement which has been led, I suppose, by certain disruptive companies, so-called? Do you think this movement is going to gather momentum and it will weed out charlatans? Because there have been charlatans.
I think definitely. I think one of the major trends globally since the global financial crisis, which was nearly 10 years ago now, is that, once all the dust settled from that, there was a realization that investors wanted transparency in terms of how the financial services system works, and they wanted transparency in terms of what is in their investments. So I think that's been one of the tailwinds, certainly in terms of the ETF space, that's been driving demand in exchange-traded funds. ETFs have been called the democratization of the fund management industry, in the sense that they are so consumer-friendly and low-cost and transparent.
Yeah, I'll stay with you, Gareth, just for this one, because the ETF movement is a massive one, and it's almost as though it removes all the layers, because, again, I don't want to have a go at any particular sector of the financial services industry in South Africa, but it seems to me that with the way that things have worked in the past, there were layers and layers, and with something like an ETF, there's just one fee, as far as I understand. Am I talking nonsense?
That's right. There's one fee. ETFs in South Africa are also structured as unit trusts. So we follow the same pricing and reporting conventions that most unit trusts follow. But it is very transparent. Not only are the fees transparent, but obviously because they're index tracking products, the return profile is also known well in advance, and you know exactly what's in the portfolio, what shares on the portfolio, why they're in the portfolio. And, back to sort of Brian's part of the market, one of the benefits of structured products, I suppose, is that they also often track a particular index, and there too, the payoff profile is well understood by the investor.
Brian, structured products. Not many people know what a structured product is. I think a structured product is something that is very sophisticated, and someone will phone up Investec, another institution or something, and say, right, structure this for me. It's a massive 6-month hedge or something that I've got. But apparently not. It's now available to the retail investor. And also, I would have to say that apart from the cost aspect of this conversation we're having, it's the knowledge aspect as well, which has to be opened up and be more transparent.
Sure. And certainly it's probably an unfortunate name that's come historically. Certainly our structured products that we have in the market at the moment are really designed to show the investor what the payoff will be in the future. So they very much do what they say on the box almost. We say, we'll give you capital protection if the market goes down. We'll pay you a certain amount if the market goes to this level. So you really have, I suppose, defined outcome before you actually invest. And what we've done with the fees in those particular products is all the fees are actually worked into the product when the investor buys it, and we have, for example, 5% upside given. At the end of the term, the investor gets the 5%. There are no more fees. There's no fees to pay. So that's really made it far more useful for investors to actually take part. They know what they're getting when they go in. They know what they're getting when they come out. And none of the fees are taken off that actual investment.
Okay, I'm going to annoy the hedge fund industry now, Gareth. Final question to you. When is the hedge fund industry going to stop charging 20% or 25% performance fees and actually join the movement we've just been describing?
Good question. I'll plead sort of is it the Fifth Amendment on that one. But I guess the issue here is that the industry as a whole is under pressure to make sure that they deliver value on whatever fee they deliver value on whatever fee they're charging. So at least I suppose with hedge funds, you are getting a return profile that is vastly different to the market, whereas many active managers who charge a very high fee end up giving you a return that is almost in line with the market and very often below the market. So there the value for money really is questionable. At least with hedge funds, it's something quite different to the general market. There's a lot of skill involved in running a hedge fund. Do they always work? Are they always value for money? I can't comment too much on that.
Did you see how diplomatic he was there? We'll have to leave it there. Gareth, thanks very much for your time in Joburg. Gareth Stobie is Managing Director at Core Shares, and Brian McMillan in Cape Town with me, Head of Retail Sales for Investec Structured Products. That's